Thanks for joining us, everybody. It's February 10th, 2012. This is Taylor Hudson, joined by Hugh McNaughton for Sprague's Market Brief. Well, we had a pullback of all things today in oil and equities markets, and Hugh, that sure does feel odd.
How about that, Taylor? An 8-day winning streak comes to an end, depending on who you call winning, and that is odd indeed.
So what were the talking heads on CNBC talking about today?
Four factors in play maybe behind the pullback. First one was were unexpected new doubts about the Greek restructuring to qualify for another bailout package. The second one was an IEA, International Energy Agency, reduction in 2012 demand for the sixth straight month in a row, citing a weak economy. And the third immediate factor was a report on slowing Chinese domestic demand. Crude oil imports at 2-year low. The fourth factor, though, however, most likely was, or most probable, was a round of profit taken in a strongly overbought market with RSIs running over 70.
So speaking of demand, I thought the next thing we might do is have a little quiz. We have a significantly rare event that's going to occur in the Northeast this weekend. It's called snow. Believe it or not, a snowstorm is forecast, courtesy here of John Baggioni, to hit the New England, even down into the Mid-Atlantic, and actually bring some winter weather for once to our market. Following up on that, Hugh, just curious, which one of these pictures here to the left is Boston, Massachusetts in the middle of winter? What's your guess?
I hope that's a rhetorical question, Taylor.
Unfortunately, it's the people jogging. So it'll be a little bit different this weekend. Top picture, unfortunately for us, is Germany. So let's jump right into what we actually saw. Get a little serious here in terms of what the markets actually did. First chart up, Brent crude. You can see today we actually had quite a pullback early. The market went all the way back to those 116.5 levels left over from November that in the last brief we talked about was a pretty important breakout higher. Didn't close anywhere near there, though. Moved right back up and only closed down about $1, and not too far off the high set yesterday at 118.79.
Stepping back, Taylor, the Brent still closed up almost $3 on the week. That's 2.5%, and that's up for the third straight week in a row.
No relief there. On the 2-oil side, we had sort of a similar chart action later this week. We had the market moving up over the 320 level and really didn't do much on Wednesday, Thursday, or today. Has stayed in that range that we set back on Tuesday. Near-term high going to be set at 322.24. Near-term lows right in the call it 18 level. So we are sort of stuck in this high level for heating oil. Felt odd today because we actually had a pullback. We saw a lot of activity here at Sprague, but no serious chart damage done here either, I don't think.
No, heating oil, of course, in this whole run-up here is up 13 cents since the beginning of the year. And both heating oil and Brent are still at near 7-month highs, even after today's pullback.
A little bit more chart action. WTI, this one really interesting from a weak early, strong late perspective. We pointed out in this chart in our last brief that the market had moved back into those moving average territories. They would act as resistance. As soon as you and I issued that report and it went live, the very next day we broke right up through those resistance levels. We traded right around that $100 mark again. Spent yesterday, Thursday, up above those moving average numbers. Today we came in, and early you and I were commenting how the market for WTI had gotten below the moving averages and went back and tested that low from January 23rd at 97.5. Stopped right there, dead in its tracks, and guess where we settled, or we were when I took this this snapshot of the market, we were right back at that 40-day moving average level at 99.04. So again, evidence of some weakness, but nothing that really did any chart damage, unfortunately. Finally, gasoline, the RBOB chart continues to look ugly for those who hate to fill up their cars with gasoline at these levels. Near-term highs, 301.62, no real threat to the moving averages at all. Had a little bit of a pullback today, but no serious damage. So, Hugh, with that, I'd like to invite you to kind of give us a weekly wrap-up, if you will, and send us out with sort of the basic message here.
Well, Taylor, today's pullback was a little bit of a little welcome breather, maybe, in a market that's given us no mercy for the last, obviously, week and a half. Unfortunately, from the standpoint of what we as consumers want, what we know our customers want, what Sprague wants, which is some kind of permanent or at least a more significant relief, it doesn't look like it's necessarily in the cards. The bullish factors that behind this continuing run-up are still in play. We have geopolitical uncertainties. We've got continuing bitter cold in Europe. And finally, even if the IEA cites a weak global economy, there are signs that the U.S. particularly is showing some encouraging economic growth.
Well, with that, we wish everybody a fantastic weekend, and we'll be back next week. Thanks for listening.